Sign up today for a 7-day free trial at alerts.chartguys.com. Hey everyone, checking in on the market. So a couple little headlines that are causing short-term fluctuations and volatility. The first is in futures trading last night, we saw some rocket headlines landing near a base, leading to a dump in the futures market. Not significant, but definitely impacted the short term. Could we be seeing the same number of rockets we were seeing 3 months ago? Absolutely, but the market is paying more attention now. It means more after everything that's gone on in the Middle East over the last month. Another thing we saw today was news that this virus from China was potentially, or there was a case in Seattle. So that's happening right here. We were up at the all-time high. We have an all-time high double top to the penny. And then about 40 minutes later, the bearish reaction to the fact that we are seeing this virus now in Seattle, potentially some of the airlines internationally in Atlanta and somewhere else are going to be going through some more screening to protect our country. We'll see. Keeping an eye on it. It's not enough to derail these bulls. It's enough to see short-term fluctuations. And what it did today is it dumped the price. We saw a 5-minute equilibrium. The equilibrium broke bullish. A little bit of sell-off in the end of the day. But again, all things considered, SPY right now, second highest close in the history of forever. So we know it's not significant news, and we're going to keep an eye on it. Anything on the daily chart? Let's see. We held double bottom. Pretty much the last 2 days is the exact same range. So if we break the double bottom in the last 2 days, we're looking for a daily higher low compared to 320.15 using the exponential 12-period support as a guide. And there's no red flags for the bulls right now with the current setup. We also just had Netflix earnings, and we'll talk about that when we get to QQQ. IWM pulling back. Anything above 164.07 is a daily higher low, and we'll be looking for an hourly trend change to indicate that the daily higher low has been set. No sign of that hourly trend change right now. No major red flags. Still in a daily uptrend. So QQQ, all-time high today, broke the high of last week by a couple pennies. After hours, reaction, not really notable. And that's because Netflix reaction has not been very notable. Netflix is the first tech sector name to react to its earnings, which means we are going to be looking at other names to react and correlate with it. So Netflix, a lot of volatility. We had a bull move, a bear move. We were break even for a while. And now we're watching the upper end of this range. So in general, a bullish reaction, but not meaningful right now compared to where we closed today. We're up less than 2% or just about 2%. But if we look at other names, let's see Amazon after hours and how the price is reacting here. Again, correlating, not a ton of Amazon volume, but right up at the high of the day. Let's see if Facebook is reacting. Again, no major reactions from the tech sector. So what that tells me is pay attention now to the next major name that has earnings, because the first tech sector name that is a major name that sees a 5 to 10% reaction to earnings, that's when we're going to see some correlation with the names who have not reported yet. But 2% in either direction reaction, sector is not going to care. So QQQ short-term support 219.45. Anything above that's a daily high or low. All-time high every day the last 3 days in a row. Bulls in full control. XLF, still keeping my eye on it because I believe that our first red flag in market strength will come from XLF if we're going to get a red flag. We saw a new all-time high on Friday, but we only broke resistance by pennies. 31.08 was a double top. We broke it by 2 pennies. Here we are closing at the low of the day. The most important levels for me are 30.57, but more so 30.46. Because again, if this level breaks, more significant weekly consolidation will be underway. And in my opinion, that will mark the all-time highs for the S&P 500, at least for the short term. We've been trading sideways for 6 weeks on XLF, and breaking that level would be notable. So that level is very key for me for the next couple weeks. XLV, new all-time high, bulls in full control. When we lose the higher low everyday pattern and break this little 104.21, 104.23 double bottom, we look for a daily higher low compared to 101.95. Biotech sector pulling back fairly notably, still looking for a higher low compared to 92.14. Let's not lose sight of the weekly chart, which may be setting a weekly lower high. So just like I know what XLF has to do for the bears to take over, for the biotech sector, which has less of an impact on the S&P 500, but it would still be notable if this is a weekly lower high at 97.64, and if we now drop down and break 91.83, we would then be in a weekly downtrend, which would certainly stand out. So 91.83 is the most important level for me on XBI. It's very easy to mark these line in the sand levels. This is the most important level. If the price is above it, we're bullish. If we're below it, we're bearish. It keeps things very simple, no emotion involved, very fact-based, if-then scenarios. If XLF is above 30.46, the bulls are still holding on just fine. If 30.46 support breaks, then the bears have more control in the financial sector than we've seen in months. The VIX today, looking for this weekly higher low to be set. Equilibrium, higher low trying to form at 1180. Anything under 1640 is just a lower high, but bulls would need more follow through from here. We would have to get a move over 1380 for me to be comfortable saying our weekly higher low has been set. But we are now multiple months into this tightening range, and we're going to be looking for a break of this tightening range to dictate short-term direction in the volatility index. Gold. So gold had a reaction to the after hours rockets headline. There's our bull reaction. There's the market saying, no big deal. And then we bounce. So let's look at the 4-hour, potentially setting a lower high. Bulls have to regain this 4-hour trend in order to be back in full control. Daily exponential support, still holding for a week in a row here. This is the 12-period exponential support. And I would need to see a break of 1536 for the gold bears to prove anything to me. Silver, as we've been noting, has been weaker than gold recently, and it's already broken its low of consolidation, 1768. We broke that level by 5 pennies. Not a huge bear break, but again, lowest price that we've seen in multiple weeks being hit today in silver, and gold didn't get close to that being the case. So weekly consolidation still underway for silver. Exponential 12-period support still holding. We're certainly anticipating a weekly higher low compared to 1653, but until we can see control regained on this daily time frame with a higher low and higher high, we are in weekly consolidation mode. Bull miners showed up in a big way today. New daily higher low of 30.63. Bull break over the recent high of 32.86. And this was one where we saw a significant correlation to gold. If you look on the 5-minute time frame, from the open to 11 a.m. was all bulls. And this looks like automated buying. And then when you look at gold, you look at the 5-minute time frame and see what was happening at the same point in time. You say, okay, that makes sense. The miners were responding to what gold was doing. And then you see gold holding on most of the day into the end of the day here. We closed right up near the high. So NUGT did as well. Very similar correlation between gold and these miners, and holding on just fine. Zoom out to the weekly chart for NUGT. Anything under 36.84 is a weekly lower high. And the question is going to be, are we going to see a tightening range form here now? Again, the 2-day time frame to smooth things out a little bit. Watching for a lower high compared to 36.84, which means keep an eye on dust to be looking for a higher low compared to 5.30. Oil. So oil bounced and formed a daily lower high. The bulls have to hold 57.40 and break 59.61 to change this daily trend back in favor of the bulls. So low of the pullback, high of the bounce, which is just a daily lower high. Higher low trying to form, but a long way to go for the bulls to get over 59.61. That's another 2% move. And we have to see that happen, because if we break 57.40, it's just continuation of the daily downtrend, which would mean zoom out and a little bit of a weekly bear flag if that bear break were to take place. So oil is going to be interesting in reaction to its inventory report to see whether we can head up to try and change the daily trend or whether the daily downtrend follows through. Natural gas dumping down to lower lows. Huge dump once we opened this week. Inside bar, and candle just changed over. So tightening range, a break of 1876 has us looking at 179, and a bull break of 1956 has us then zoom out and look for a daily lower high. Look at the daily exponential resistance. 4 rejections, another 6 rejections, 7, 8, 9, 10, 11. So if we can't get over these exponential resistances, bulls aren't going anywhere, and that's our target on any bounce, looking at those levels. 4-hour time frame, it was a very short-term bounce, but again, bears have complete control of the monthly, weekly, and daily trend, and we know that even if we bounce 10% from where we stand right now, we are looking at a daily lower high forming. So the bears are extremely comfortable, and they're just sitting there on the sidelines if they're not in a position waiting for another entry on another daily lower high, just like they did back here. So that's where we stand. Bulls just fine, big picture. Netflix earnings not really having any impact on the market as a whole. Headlines having short-term impact, but the bulls keep buying the dips on those headlines. And as always, we know we have to lose daily uptrends. We have to see big bear volume more than the 20-day average. And we have to see losses of the daily 12-period exponential support if the bears are going to prove anything to us. Are we overextended? Are we euphoric? Can this last? Well, I should say yes, yes, no. But there's no sign of it yet. I need some reason. Being overextended is not enough for me to try and fight blue sky breakout bulls. I need to see volume and price levels breaking to have me interested. Hope you're well. Tesla's still providing daily volatility, all-time highs in after hours today. Again, Tesla is easily my most profitable ticker in 2020, only 3 weeks into the year, but striking where that volatility is after Tesla gave me, I've probably traded Tesla more in 2020 than the entirety of 2019, just because the opportunity is there. So I pump the gas and trade it hard and fast and often. And then when that opportunity dries up, I'm going to stop trading it. And that is what's essential as a trader, knowing when to go aggressive and hit it hard and when to back off and be patient. Thanks again. See you soon. We'll end it here with a video from yesterday. And I want you all to know that I sacrificed walking in barefoot across seagull poop in order to get these shots.